Hi, Matt McAleer, Director of Equity Strategies at Cumberland Advisors, just after the close Friday, May 31st. Tale of two markets this week and this month. Bond market in fuego. If you told me 6 months ago, when the 10-year Treasury yield was at 3.25, that by the end of May we would be at 2.15, I would have pushed all in and you would have taken all my money. If you recall, John Musso, head of fixed income here at Cumberland, was on back then describing how we were an aggressive buyer of those yields. That worked out well. We've let some go into this strength. We'll see what we can do coupon-wise over the next 30, 60 days. Equity-wise, tough month. We see new highs coming into May. Very solid performance. And then 4 straight weeks of losses. Where have we positioned ourselves? Well, in our U.S. ETF portfolio, mid-month we did raise cash. So that was timely in terms of the last 10 days or so. We sit there at 21% in our U.S. ETF portfolio, 27% cash in core U.S. That will be pointed towards some of these levels that we're starting to get to interesting points on, specifically in the areas that have shown great relative strength. Software, medical devices. Still think growth is the place to be because value hasn't held up in this pullback. We'd love to see value hold up and be able to make a little diversification move there. Not yet. International, 11% cash. Interestingly, this week, we saw a little bid the back half of the week in the emerging markets. Normally thought of as a risk-on trade, you would have thought historically that you'd see continued weakness there. But some of our holdings performed well. Indonesia, some of the Asian markets after getting clubbed for the last 3 weeks. Tactical trend portfolio. No trades this week, about 10-11% cash. Still looking at relative strength areas to add into that area. One thing I wanted to bring up, in our short-term trading account, our market volatility account, Dr. Chen has been on before. That's a quant strategy that's machine-driven off formulas we've developed over the last 4 or 5 years. The strategy itself is 3 years old. Did not get a buy signal this week. We thought with some of the volatility we might get a buy signal. If you recall, that's a all-in 100% in the S&P 500 or 100% in cash. Back in early April, we got our sell signal, went to 100% cash. We still are in cash there. So what that tells me is we haven't seen a degree of fear and panic in the market to generate those signals that Leo, Dr. Chen, and ourselves have developed in the course of the last few years. Muted put-call ratios. Like to see a little bit more fear there. Be interesting next week if we continue with this supply banging demand in the equity markets. Be very interesting to see if we get a buy signal there. In terms of what we'll be looking at next week, very attuned to the fixed income market. If yields continue to drop there, we have to be more and more concerned that we're near the back end of this economic expansion. We'll be back with you next week. We'll see what Monday through Friday brings. Have a great weekend.